Hello, everyone, and thank you for taking the time to review the real estate market analysis for Santa Clara County, California for November of 2009. My name is Robert Whitelaw. I'm a licensed real estate broker in the state of California. I'm also a member of the National Association of Realtors and a certified ePro. Now, there are a variety of ways to get in touch with me. Probably the best way is to just track me down at my website at www.soldbyrobert.com. You'll also find access to probably the best MLS search tool available for the area from San Francisco all the way down to Monterey. You'll also find access to these videos and also to my weekly podcast on real estate called Real Estate Realities. You can also find that on iTunes if you're interested in getting it that way and downloading it to your iPod. If you'd prefer to contact me directly via email, just send those to robert@soldbyrobert.com. If you prefer to call directly, just dial 408-852-0525. And if you'd like to use any of the popular instant messaging programs like AOL Instant Messenger, Google Talk, or Yahoo IM, the screen name for that is The Rebel Broker. And if you're a Skype user, the screen name is Rebel Broker. And of course, referrals are always appreciated. If you or anyone you know is interested in buying, selling, or investing in real estate in the Silicon Valley area, go ahead and give me a call. I'll be happy to help any way I can. And if you're not interested in real estate in the areas that I serve, I can still help you find the right agent for you no matter where you are in the United States. Now, let's go ahead and jump in and take a look at the numbers for Santa Clara County for November of 2009. Now, we can see that we've got some good inventory numbers. Those have dropped nicely. Sales have headed up. New listings have gone down. So all the numbers are headed in the right direction. Let's break it all down. Sales are up 45.47%. That's 281 more homes sold in November of 2009 than the same time last year. That gave us a grand total of 899 homes sold. Let's see, new listings dropped by 15.36%. That's 194 fewer homes listed at the same time last year. Total homes listed for the month, 1,069. Now, the total inventory for Santa Clara County dropped 43.7% from November of 08 to 09. That was a 2,313 home drop in inventory, leaving us with a grand total of 2,980 homes still on the market in November of 2009. Now, if we take a look at what the inventory numbers have done as far as the ratio between the number of homes that have sold and the total inventory, we see that we have about 3.31 months of inventory on hand. It's actually a pretty healthy number. If you think of it also from the seller standpoint as sort of a competition index, it tells you that for every home that sells, about 3 homes are on the market. Again, a relatively healthy number. That shows that we've got a little bit more of a balanced market. Anywhere in the 4 or just below 4 range for this ratio, I think is a healthy place. Now, it's a little bit worse than it was last month. Last month it was at 3.12. Now, let's go ahead and move on and take a look at the same statistics, just going back chronologically now. We're not skipping months. We're not just looking at the month of November. We're looking straight back all the way to May of 2008. And let's look at the trends we saw. Now, clearly the inventory is making its way down. Everything's heading in the right direction. Is there anything we can learn about well, let's go ahead and talk about the changes, though, from October. So from October to November, solds decreased 12.38%. That's 127 fewer homes sold in November than October. That's fairly normal. That's a normal seasonal occurrence. If you look back at last year, you can see that once you get through September, you tend to see a decrease. So October, November, December. We had a little bit of a blip in December actually last year, but right on into January, you usually see declines, and then things don't start to pick up again, usually until February as we head out of the wintertime. I suspect we'll see the same thing this year, but we're already in a bit of a better place as far as sales are concerned. So as I said, solds are down 12.38. That's 127 fewer homes sold in November than in October. Listings are down 25.56%. That's 367 fewer listings during the month than last month. And the inventory is down 6.93. That's 222 fewer homes on the market in November than were on the market in October. Can we get anything from the inventory numbers as far as where we're going to go given last year's performance? Well, clearly we're at a much lower inventory than at the same time last year. If you look at November of last year, you can see things pretty much steadily declined right on into the winter months, which is very normal. We usually see a dip and then a little bit of a bump right after we get out of the December time frame, as people come out of the holidays and start thinking about putting their homes on the market for the coming summer season. And that's exactly what we saw last year, and my suspicion is that we will see the same thing this year. I think those general trends will remain the same. I think the sales numbers will emulate what we saw last year, and if you look at November of last year, you can see that it was relatively flat right on through February, and then with a gradual increase, I think we'll see the same thing. I don't see any indicators that we're going to see terribly unusual performance as far as what the normal trends are. Now let's go ahead and take a look at the short sale and foreclosure data. You can see that this particular month, short sales made up 18% of the homes that sold. Foreclosures made up 20% of the homes that sold. And 61% of the homes that sold did so conventionally, meaning there was no weirdness involved, no foreclosures, no short sales, just a regular seller putting a house on the market and a buyer finding it and buying it. When we compare that to last month, you can see that short sales were at 17%, foreclosures were at 24%, and conventional sales were at 59%. So conventional sales have managed to gain a little ground. That's nice. I'd like to see that conventional number a lot higher. I'd actually prefer to see conventional sales, given the market we have right now, up around 75%. But you can't always get what you want, and unfortunately, I think that we're likely to see an increase in foreclosures next year in the first part of 2010. If you want to get more information on that, I've been doing a lot of talking about that on my weekly podcast, where we sort of keep our fingers on the pulse of what's going on with foreclosures. So go ahead and take a listen there if you'd like to hear what's going on relating to foreclosures. Now let's go ahead and take a look at home prices. You can see we've definitely seen an adjustment. What's interesting is that we've now seen prices recover a bit from the same time last year. I don't know if I'd call this a real change in the average price, but I would definitely refer to it as a shift in the buying trends. So instead of thinking to yourself, well, we're seeing the average price of a home that sells going up, which is technically correct, I think what this really indicates is a shift toward more expensive homes selling. I don't think the homes at the various brackets I think should still remain priced about the same as they were a year ago, frankly. But I think we've just seen more buyers come out and take a look at properties that are at the higher end that weren't selling before. And the bottom line is that we had so many higher priced homes on the inventory, and we have sold so much of that inventory. You're just naturally going to see the average price go up a little bit, since we're seeing more of a spread out. Before, the emphasis was all on properties that are under $500,000 or $600,000, and that really kept the average price low. But now what we're seeing is a little bit more of a spread out, so that we're getting more purchases happening at the higher end, which doesn't necessarily mean that you should suddenly think, oh, it's time to raise my asking price on my property. Okay. Now, the average sales price in Santa Clara County was $748,741. The highest priced home was at 14850 Baranga Lane in Saratoga. That home sold for $4,588,000. Which I think demonstrates pretty well the idea that we're seeing more activity at the high end. Its original list price was $4,990,000, and it was on the market for 100 days. That was actually a fully remodeled home in 2005, virtually rebuilt from nothing. The property was originally purchased in 2001 for $1.5 million, but it was an acre lot, and it was really purchased more just for the lot than anything else. The entire house was really rebuilt. Now, the lowest price home was at 170 Center Road in San Jose. That's right near the intersection of Monterey Road and Center. That sold for $100,000. According to the multiple listing service, its original list was $219,000. But if you take a closer look at that listing, its actual original list price was $595,000. Realtors used the process of relisting to make it appear as if the original asking price was lower than it actually was. If you want to learn more about relisting, you can visit my website and just do a search on relisting. I wrote an article on that a while back that I think discusses it pretty clearly. The days on market for that property was 135 days, and that was a bank-owned property. Let's see. Change from last year, the change from 2008 to 2009 is an increase of 17.43%. That's a dollar change of $111,148. Now let's go ahead and take a look at the same data in past months. And I just hit the wrong button. There we go. Let's take a look at these numbers going straight back. Now this is an interesting one to look at because we get so many sales in Santa Clara County. There really isn't a need to look into this more deeply and adjust. I mean, we get so many homes that sell, 1,000 homes that sell, that these statistics really do show it. You can see where it clearly went down and hit rock bottom right around January of 2009, February of 2009, and has sort of increased steadily. And again, this is going. If you look at this and compare this to the inventory numbers, this goes hand in hand with a reduction in those inventory numbers. So again, what you're seeing is less of an increase in average home price in general and more of a shift in the buying trends of buyers. So this shouldn't indicate to you that if you had a house that was in the $500,000 to $700,000 price range that you should suddenly raise that price. This is simply an indicator of shifts in buying trends versus any real change in average price. And of course, if you want to get more specific information on your property, your best bet is to get a competitive market analysis. Something I'd be happy to do for you if you're in this area, but something that would help you sort of gauge what the current value is of your property, what you could possibly get for it if you decided you wanted to go ahead and put it on the market. The change from last month, from October to November, was an increase of 3.83%. That's a $27,644 increase. Now let's go ahead and take a look at the days on market. Days on market are actually down from the same time last year, down 28.72%. That's 27 fewer days to get a home sold than at the same time last year. I think that's a fairly realistic number. I think 67 days is a realistic expectation on the part of sellers if you're looking to calibrate yourself to how long it's likely to take to get your property sold. I think that's pretty reasonable. I don't see any reason to question that particular number one direction or the other. And let's take a look at the same data. Now we're just looking back straight to May of 2008. And you can see sort of the steady increase. Now, oftentimes what you'll see is an increase or a boost when you're dealing with smaller numbers. These are actually pretty reliable since we have such a large sampling of data. But you can definitely see the trend was up. And then we saw that, remember, the days on market period is directly linked to the lowest point on prices. Now, if you'll remember, that's when we also saw our inventory going down. So suddenly a lot of homes started selling at these lower prices in January. That's when the days on market went up. And that's a phenomenon I've talked about before, where you'll see the days on market sort of peak right when you start getting more and more sales because you're starting to sell off a lot of things that have been on the market for a very long time. Okay, now I do appreciate you listening to these market presentations. I'm not going to read through all of this again because we already did that at the top of this particular show. I hope this has been good information for you and helps you make good, educated decisions on what's going on with the markets here in Santa Clara County. If you'd like to get in touch with me, just use any of the methods listed here, and I'll be happy to help you out any way I can. Thank you very much, and I'll talk to you all next time.